JV Cycles here with the weekend update on April the 27th. So I made some other videos this weekend, which you should check out. They should be interesting as well. But here, as usual, I'm looking at the 4-week cycle with a 2-week oscillation within it. And previous week, as expected, we made a 2-week oscillation low, although I wasn't prepared for that kind of a drop on Monday. A little bit downside I did expect, but yeah, that was kind of a bear trap. And now I did expect upside into this weekend, which we got, and now my cycle is bearish next week. But I am quite uncertain about the next couple of weeks, because, well, we are quite oversold. It's been a long downtrend, and I'm not that used to, bear market and bear market rules. And, well, I'll come back to the problems I see. But when forgetting about the problems, I still expect this to be a counter trend ABC move, and we should continue down and complete a bigger bottom formation in the middle of May, which is the normal historical pattern in such a down leg. Let me see, because this green average here is a typical first leg down in the bear market, and we often, or sometimes, we get some kind of a panic at this point, just like we got, and then normally we get a bounce up to about the level from this low, also often around the 50-day moving average, and then we drop down. Now we have a couple of analogs here, like 1998, 2000 and 2011. So when comparing with these, we see this is about the point where this bounce topped out, and then we drop down to make some kind of a bottom formation. And we could look at some trend lines. We see we do have broken this trend line the recent couple of days. But if we look at like the 1998 scenario, then the trend line comes here. We see here we did break it and then drop down to back test it. If we look at the year 2000, we get this trend line. We see we did have a breakout, and then we drop down to back test it many times. So yeah, looking at daily trading days, we see we had a breakout. But that bear trap we had on Monday, it made this look like almost a double low. So now we have kind of this trend line, and we are way above that trend line. If we had not dropped down on Monday, this trend line would more have been like this, and much easier to break that trend line. So I'm not quite sure if we do have a good selling setup here. I would have preferred to see some kind of a double top here, maybe, before I was confident about selling. And that we can see that in the hourly data for Dow Jones Industrial. As you see here, I have the 2-week oscillation in yellow. Currently, well, maybe we have to adjust it a little bit, because actually that was a low and that was more a correct low. So yeah, something like that. And we do see we are close to this 2-week oscillation top. So we should have a bearish bias for next week. So these black arrows is my main scenario. We should start ABC downtrend to middle of May, and then we should have a bigger bounce, the summer rally. However, I'm not confident about this being a good selling setup. Maybe it's the red one here, making something that looks more like, well, that looks more something like a double top here. That would make me more confident, I think, about selling. So that means maybe the selling setup is still a week, or say maybe 7-8 trading days away. that would bring us into early May, and then perhaps we then get an ABC, and maybe the low is over here. That would make it second half of May. Yeah, so this is all just a mess. But yeah, I'm quite uncertain here. I don't feel confident about selling here. But we should see we should get some clues. We do have the 50-day moving average here in blue, approaching 5,600. Normally these counter trend bounces, they do not break the 50-day moving average, but they can get very close. If we do break it, it would suggest this is a bigger bounce that has the 200-day moving average as a target, and that isn't very much further up, 5,750. But that would be normally the target after dropping down here, and then the target for the summer rally. So we have to see. We could also, of course, break a little bit above that 200-day moving average. That's no hard resistance. But I should also mention, for new viewers, you should check out my cycles videos, my videos on the cycles that I have found through these 25 years of research. So here you see the 28-year cycle. It's alternating between wars and financial crisis. So there is also a 56-year cycle, which is a war cycle, interest rate cycle, inflation cycle. We are at the top of the channel, and the market is, we have the Buffett indicator is suggests the market is overpriced, and the Schiller PE is overpriced. So we are at the top of the channel. The cycle is bearish for the next 10 years or so. So I'm expecting a weak market. I should say this is the S&P adjusted for inflation. So that means weakness here can be from two things: a weak stock market or high inflation. Often we could see both. So here's the 56-year cycle, global deaths in conflicts, and this conflict cycle is topping, well, there's still some 7 years left to the, of this high war probability. Here is the 1970s analog 28-year cycle. It suggests we should drop down deep into summer 2026. So you should check out that video. I will leave a link at the end of this video. But I think I have shown most of it. Here I'm doing some offsets. Here I'm going back one 4-week cycle, and we see the next few days we could break the offset here, and that could be a bullish warning of something bigger. But you see, at this point, going back one cycle, it was just before the big drop. Going back 2 cycles, we went down 3 cycles. Here we just had a small drop. Here we almost had the low, and back here, yeah. And the average of these gives me this one, which is bearish, and all this corresponds to, this green average here is calculated over, I think, almost a 2-year period, or 1.5 year. This lighter gray one is calculated from back here, so it's a shorter calculation period. Anyway, I'm quite uncertain about the next few weeks, but I still stay with my main scenario, backed up from the historical analogs. So this coming week I have a bearish bias, then a bullish week, then a bearish week, and then the cycles get more bullish for June. Yeah, see you.